Are you looking for stable investments with steady earnings? Then dividend-paying companies may be just what you need. These companies distribute a portion of their earnings to shareholders in the form of cash or additional stock, making them a great source of passive income. One useful measure to gauge the sustainability of a company's dividend payments is the dividend payout ratio, DPR, which measures total dividends divided by net income. It tells investors how much of a company's net income is paid out to shareholders in the form of dividends, and how much the company retains for continued growth investments. In this video, I'll be sharing with you the top 5 high-yield dividend stocks on US or Canadian exchanges by forward dividend yield, while also ensuring that the payout ratios are sustainable for long-term growth. But wait, that's not all. Make sure you stick around until the end of the video, where I'll share with you my secret tips and strategies for conducting your own research to find the best dividend stocks out there. If you find this information valuable, make sure you hit the like button and subscribe to my channel to stay updated on the latest stock market news and insights. Your support means a lot to me and helps me bring more valuable content to you. Let's dive into the top 5 high-yield dividend stocks of April 2023. Number 5, Petróleo Brasileiro S.A. Petrobras, ticker, PBR. Petróleo Brasileiro, or Petrobras for short, is a Brazilian oil and gas company with a forward dividend yield of 75.9%. Despite having a slightly high payout ratio at 102.9%, Petrobras' strong track record as one of the largest oil and gas producers globally makes it a promising high-yield dividend stock. With a market cap of $65.2 billion and a one-year total return of 15.2%, Petrobras has been making waves in the industry. The company explores, produces, refines, and markets oil and related products, with a special emphasis on deep and ultra-deep water exploration. This innovative approach has led to Petrobras becoming a leader in the field. Recently, in January 2023, Petrobras' board appointed Jean-Paul Terra-Prates as director and CEO. This move highlights Petrobras' commitment to continued growth and innovation in the industry. If you're looking for a high-yield dividend stock with a solid track record, Petrobras might be the one for you. Number 4, ZIM Integrated Shipping Services Limited, ticker, ZIM. ZIM is an Israeli company specializing in seaborne transportation and logistics services. Despite a challenging year for the shipping industry, ZIM has continued to perform well, with a forward dividend yield of 72.5% and a payout ratio of 71.5%. With a market cap of $2.8 billion, ZIM operates a fleet of vessels and offers multimodal cargo handling, tariff management, and other related services. Although ZIM's one-year total return of -57.1% may appear alarming, it is worth noting that the entire shipping industry has struggled due to global supply chain disruptions. In fact, ZIM's fourth-quarter dividend of $6.40 per share, payable on April 3 to shareholders of record as of March 24, 2023, is a testament to the company's resilience in these challenging times. Number 3, Ecopetrol S.A., ticker, EC. Ecopetrol is a well-known state-owned hydrocarbon exploration and production company and the largest oil and gas firm in Colombia. With a forward dividend yield of 32.4% and a payout ratio of 42%, the company has a strong track record of distributing profits to its shareholders. Despite a one-year total return of -34.1%, Ecopetrol continues to be a promising investment due to its commitment to sustainability and innovation. Recently, the company's board appointed Alberto Consuegra Granger as interim CEO, effective April 1, 2023. Granger will be responsible for overseeing the company's operations and driving growth until a permanent successor is named. With Ecopetrol's dedication to producing high-quality oil and gas products while minimizing its environmental impact, it's an exciting company to keep an eye on in the coming months. Number 2, CDR Partners LP, ticker, UAN. CDR Partners LP is a leading producer of nitrogen fertilizers and related products. It is a subsidiary of CDR Energy Incorporated, a diversified holding company that also owns and operates a petroleum refining and marketing business. With a forward dividend yield of 27.9%, CDR Partners offers investors an attractive income stream. The company's dividend payout ratio is currently 71.4%, indicating that it is committed to returning a portion of its earnings to shareholders. While its one-year total return of -19.1% may not be as impressive as some of its peers, CDR Partners remains a strong player in the agricultural industry, with a market capitalization of $0.9 billion. The company's most recent dividend payment of $10.50 per common unit was made on March 13, 2023, and demonstrates its continued commitment to rewarding shareholders. And the number 1, AP Moller-Maersk AS, ticker AMKBY. AP Moller-Maersk AS is a global leader in shipping and trade logistics, with its subsidiary Maersk being the largest shipping company in the world. The company's revenue was nearly $82 billion in 2022. AP Moller-Maersk has a solid financial position, with a forward dividend yield of 26.2% and a low payout ratio of 37.5%, indicating that the company has the capacity to continue paying its dividends while also retaining earnings for future growth. The company has a policy to distribute 30 to 50% of net earnings to shareholders as an annual dividend, while additional earnings are used for share buybacks and capital expenditures. Investing in AP Moller-Maersk can provide a steady source of income for investors seeking exposure to the shipping industry. Now that we've looked at 5 different dividend-paying stocks and their key financial metrics, it's time to share with you my secret tips and strategy for researching dividend stocks. But before we dive into that, we'd love to hear about your own research strategies and tips in the comments section. Don't forget to give this video a thumbs up if you found it helpful, and consider subscribing to the channel for more valuable investment insights. When it comes to investing in dividend stocks, there are several factors to consider beyond just the dividend yield. A high yield alone may not always be a good sign, as it could be a signal of trouble if the company is struggling and paying large dividends to attract investors. Here are some other key aspects to examine when researching dividend stocks. Payout ratio. A payout ratio between 35% and 55% is generally considered healthy, as it suggests that a company is distributing a reasonable portion of its earnings as dividends while also retaining enough for growth and reinvestment. Dividend increases. A history of consistent and increasing dividends is a positive sign, as it indicates that the company has been financially stable and committed to rewarding its shareholders through both good and bad economic times. Dependable revenue and earnings growth. Stability in revenue and earnings growth over time is a desirable trait in a company. While occasional fluctuations may be normal, consistent underperformance or erratic results could signal trouble. Market share and competitive advantages. A company's market share and competitive advantages can be key indicators of its ability to maintain strong performance. These advantages might include things like intellectual property, advanced technology, high barriers to entry, and a well-known and respected brand name. By considering all of these factors and conducting thorough research, investors can make informed decisions when selecting dividend stocks that are likely to deliver consistent returns and growth over time. In conclusion, investing in dividend-paying stocks can be a great way to generate steady income and grow your wealth over time. However, it's important to consider more than just the dividend yield when selecting stocks to invest in. Other key factors, such as the payout ratio, dividend history, revenue and earnings growth, and market share and competitive advantages, can all provide valuable insights into a company's financial health and growth prospects. By conducting thorough research and considering these key metrics, investors can make informed decisions when selecting dividend stocks that are likely to deliver consistent returns and growth over time. With a solid investment strategy in place, investors can build a diversified portfolio of dividend-paying stocks that meets their individual financial goals and objectives. We hope that you found this video helpful and informative. If you have any questions or comments, please leave them below, and don't forget to give this video a thumbs up and subscribe to the channel for more valuable investment insights. Thank you for watching.